Another stock market update the week of 3rd of March. And as we predicted last week, and I think the week before, not a good week for the markets. So let's have a look at the data and what we've got on there for you. First things first, that, as you can see, is market valuations based on price earnings ratios. So the lower the number, then lower the share price per earning per share. So price earnings ratio is basically what it is. Greens means cheap. Energy is cheap. Banks are cheap as well. By the way, I'm going on vacation next week. Technology, well, overall, didn't have a good week. Much didn't have a good week. Energy did. Some of the banks did. Yeah, aerospace, railroads, utilities. However, don't forget this whole narrative about the market being overvalued, as you can see from these PE ratios, that is feeding into the market this week, as we said it will. And we'll look at the technicals and the charts in a second. This is price earnings growth ratios. Now, you will know what these are. These are based on the share price relative to profit growth of the company, and lower the number, cheaper it is. So marked in green. Energy, again, is just about the only cheap thing. This is what people mean, all this red, when they whinge about the market's overvalued, it's bound to fall. Doesn't necessarily mean it'll fall. However, when you look at the S&P 500, and this bit's really important, when you look at the S&P 500, you can see on this weekly chart, it's been falling for a while now, as we said it would. We really need this to flatten and rise before you're going to see this stopping to fall. The first alert that it's going to rise will come when this bottoms out and rises. And you can see there's a little bit of time left. Or this starts moving up again, and then finally this moves up. It'll be the last to move up. And these, for those who don't know, are various momentum indicators. They measure things like, is the price making a new high relative to what it was a few weeks ago, higher lows, higher highs, is the price closing near its high, etc., etc. All little mathematical operations to try and remove noise from the market. Anyway, the bottom line is I'm not worried. Worst case, you get a 15%, worst case, you get a 25% drop in the market, which I don't think will happen, but I think there's a 15% likelihood of that, which is what some of the biggest scaredy cats are saying, that it's going to get down to around there, if not worse, which would bring us back to 2019 levels. Do you see that happening? I don't. FTSE 100 for the Brits amongst you, well, whilst the monthly momentum is rising, it is near a peak it's been at before. And therefore, don't be surprised if the forthcoming week isn't a positive week. Apple, we've got, obviously, it's now at its support resistance line, but this is still falling. And the stochastic is set to fall. So that worries me. The only thing which might be a saving grace and you get a positive week for Apple is if the the monthly stochastic is the one which is more important, which is less likely. So don't be surprised if this falls below that support, but don't panic. That often happens, which is why people think technical analysis is rubbish. And I'm still owning Apple, and I don't mind. Alphabet, we have some support over here. This is still falling, so you might get another negative week. I wouldn't buy more now. I'd wait another week. Am I okay with what I hold? Yeah, fine, because I don't trade my investments. Similarly with Microsoft, look, similar story that you saw earlier to Apple, because they're highly correlated. That'll probably happen before it goes up. We thought we'd seen the last of the falls when it won't appear, but I don't think so. I think it might do this before it does that. Amazon, now this is further along the line, and you can see what happens. It can keep dropping lower and lower. So when you thought it was going to go up and it pulls back, well, the momentum didn't hold. Is it something to worry about? Not necessarily. It's still on the trajectory we projected, which is a 53% return over 12 months from that point over there. We'll keep an eye on it. Would I buy some more this week? No, I'd wait another week, wouldn't I? Warner Brothers, base, rise, most likely. Happy with this, because from when we got in at the start of the year to where it is now, it's on target to continue upwards. Of course, I wish things moved in straight lines. They don't. Disney. Similar story to Warner, base, probably more likely to go up. However, it did pull back. So don't be surprised if, like Disney, Warner Brother also pulls back. The bigger picture is the longer term, i.e. for me, long term is 12 months, okay? That says 107% return. I'm not saying it's necessarily going to do that. If I get a 40%, which is my hit rate that I want to achieve in the markets for my SIP and pension, then I'm okay with that. Taiwan Semiconductor, well, actually, whilst I look on that, let me remind you, don't forget to like and follow the links and so on. Do all of those things and have a look at alpeshpatel.com/links as well for more free materials information, especially if you're looking at your SIPs and ISAs. So that's base, that's likely to go up. There's an upward trend. I'm still happy to be holding it and not worried by recent market falls. Similar story with Nvidia. That's actually accelerated further and faster than I thought. And whilst 116% might not happen over 12 months as projected by me, nevertheless, a 40% return may well do so. So you can see what we want when it's an ideal scenario. That's actually what you want in a stock. Do I care whether they make silicon chips or they make apples? No, I don't. Okay, what I care about is the fundamentals, which have already been looked at, and then in the case of, say, something like a Tesla, it's a special situation, and because it's a special situation, i.e. the fundamentals, it's too volatile, basically. The fundamentals are not suited to me. Nevertheless, I occasionally do special situations where I'll do it particularly on another reason, which might be projected gains, potentially on the price and also on the technicals. And in this case, that's the case with Tesla, and thank you very much. It's given a good return so far. I only ever hold things for 12 months and then I reassess. Don't forget to look at my campaign for $1million.com. There's the website. Don't forget to like, follow, but also alpeshpatel.com/links as well. Please have a look at all of those things and you will get free copies of my books to download, which I wish I had a copy with me on the table right now to show you a physical copy. Well, you can see some over my shoulder, back over there. Okay, and you can download some free copies of those books as well. Thank you all very much for following. Don't forget to also look at my LinkedIn, which is where I'll show you any stocks that I've bought or sold in between. Thank you all. And to all those people who keep bumping into me in various places, whether it's Paris, Whole Foods, or the TED Talk I did this week, great to meet you. If you do bump into me in the street, do come and say hello. It's always nice to know there's people out there watching all of this. So thank you everybody for all your kind comments and so on. Thank you.